Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are doing an update on Mullen Stock, ticker symbol MULN. In this video, we will be analyzing a plethora of articles, to where the first one is titled MULN Stock. Mullen has too little cash to survive. Probably. So we'll be going over their latest news updates, catalysts, how high the share price could go, or if I think this company is going to end up going out of business. If you've recalled, I've been very critical of Mullen for quite a while now. However, I still report on it because I know some of you are heavy investors into this company. So my main goal is just to get you to practice proper risk management and don't bet all of your money on one singular stock. There are so many great stocks out there. You're literally taking on unnecessary risk by going all in on one very speculative company, but we will be analyzing other articles to see what other professionals have to say about this particular company. The next article we will analyze is called Russell Indices Will Drop Mullen MULN Stock Today, meaning that Mullen Automotive, ticker symbol MULN stock, will be removed from the Russell 2000 index, which is not a positive development or a good overall look for this company. Lastly, we will analyze an article titled Mullen Automotive Announces Moratorium on New Financing, because that's exactly what they need to do before they run out of money and completely go out of business, or at least file for bankruptcy. So with that being said, remember to go and annihilate that like button for more news updates just like this one. Subscribe if you are new. Comment down below your thoughts on Mullen and whether or not you think this company is going to be a great high performer in the future or a complete dud. And again, I have already voiced my criticism about this particular company. However, my main goal is to keep you safe. But let's honestly take a look at this company and go over their positives and negatives, the pros and cons, the bullish and the bearish news, so you can make an informed investment decision even if you disagree with me, because that is totally fine as well. So let's jump right into it. Shares of Mullen Automotive, ticker symbol MULN, have fallen around 50% this week due to one of the firm's most vocal promoters now airing some second thoughts, and that would be Lawrence Harge, who recently said in a Facebook live stream that he didn't sign up for this, that he isn't going to let what he invented to be the death of him, because he is getting literal death threats. That's how intensely people want this company to succeed. However, for me personally, there is no need for any type of death threats over anyone. If you cannot manage your risk properly, and you're willing to say that to another human being, then you really need to take a look at your life and where your priorities lie. However, let's take a closer examination on Mullen themselves to determine whether or not Mullen will be a long-term winner or not. And to me, this really hinges on their ability to survive. If Mullen can survive over the long term and actually manufacture vehicles, then yes, this could be a good company in which I would wait for this company to become profitable, and then I personally would become an investor into this company. However, if they can't do that, and if they go out of business prior to that, I would be very glad that I didn't invest any money into this company, considering that many investors believe that they are currently headed toward bankruptcy. However, let me put on my bullish hat and defend Mullen here. Since Mullen is an electric vehicle company, it is extremely hard for an electric vehicle company to scale without proper financing. Mullen's management could soon find out that external financing is going to be close to impossible for them, which would negatively impact the stock. However, there is hope, because if Mullen does achieve financing and they end up manufacturing vehicles, selling vehicles, their vehicles become popular, they pay back their debt, then this company could grow. I would compare them almost to what happened to Tesla. In 2008, Tesla found themselves 3 days away from bankruptcy, to where even their CEO, Elon Musk, referring to Tesla, said in a 60 Minutes interview that they narrowly escaped bankruptcy after securing a $40 million loan. And we are talking about the world's most valuable car maker right now. And at multiple points, they faced bankruptcy. Even during 2017, they almost went bankrupt. However, they had some very well-timed bond issuance, which saved the overall firm from complete bankruptcy and extinction. And I think that Mullen perhaps could pull off a similar venture to where they are close to bankruptcy, but overall they could bounce back. However, my personal problem is risk tolerance and risk management. Mullen is extremely speculative, right now trading at just 17 cents per share. And the reason they are trading for so cheap is because investors don't believe in them over the long term, at least not prominent investors. So I'm trying to get people to be patient here. How about about we wait for Mullen to actually show their overall fundamentals, and then their share price will follow their overall strong fundamentals if they have any. But to invest into a company that really isn't manufacturing vehicles right now, is not profitable, and is a penny stock, literally these are three things that are absolutely terrible. And since this is an electric vehicle company, they need a lot of cash on their balance sheet. For instance, Workhorse, ticker symbol WKHS, is another producer of commercial vehicles, mainly specializing in last mile delivery electric vehicles, and they currently have around $21.9 million in inventory. And that's a very large amount for a firm who is only generating around $6.7 million over the last 12 months according to the revenue. Even successful companies like Rivian, ticker symbol RIVN, have found themselves trying to sell excess inventory just to keep up with their overall debts. However, Mullen, on the other hand, has recently ran into a problem. Mullen, back in December of 2022, announced that it had codified a deal with Randy Marion for 6,000 vehicles, and this deal is going to be based in North Carolina, and this deal is worth hundreds of millions of dollars. So this is good news. However, here's the problem. Mullen will receive no prepayments for any work. They will only get paid once the vehicles are actually starting to be delivered, meaning that Mullen will need cash to even make their vehicles before they give it to Randy Marion. That means unless Mullen has another way of financing, they will not be able to afford the overhead or the labor costs to even make their electric vehicles to deliver on this overall order. The second problem is that the agreement allows the other company to return all unsold inventory to Mullen Automotive after 12 months for a full refund. That would be absolutely catastrophic for Mullen Automotive. To add even more problems, Mullen as a stock is going to be delisted and removed from the Russell 2000 index. And if you point out how other prominent financial institutions like BlackRock or Vanguard or other types of high-profile finance institutions which focus on investing, these types of institutions buy in to indexes such as Russell, and that's why they own Mullen Automotive. If Mullen isn't even a part of these indexes, these larger companies are not buying Mullen Automotive stock on a singular basis. Mullen is only included because these larger institutions are buying indexes, which Mullen just so happens to be a part of. However, they are not going out on a whim and buying Mullen stock specifically or singularly. So please be aware of that, and don't be led astray about other people saying, oh, well, these high-profile institutions own Mullen stock. Well, I personally own Mullen stock, but not directly. I only own them because I have bought indices which currently hold Mullen stock. But that is even set to change, considering that they fail to meet the Russell's $1 minimum closing price requirement. So essentially, this company is getting riskier and riskier. Again, I am not saying that Mullen is not a good company. And I don't know where the share price is going to go in the future, but if you want to be a smart investor, you need to practice proper risk management. The risk to reward ratio is extremely unbalanced here. The risk is much higher than the overall reward, unless you want to bet just $1 to $5 into this company. But if you want to make a substantial investment, this in no way is good risk management by investing into Mullen, at least right now. Wait for the company to prove itself, or at least have a projection of becoming profitable, and then we can talk about investing into this overall company. But in the meantime, I'm really trying to stress proper risk management. However, I do want to end the video on a positive note, where Mullen Automotive announces a moratorium for new financing. Mullen recently announced and reached out to investors for a financing moratorium for the remainder of 2023 so it can raise sufficient capital to get on hand to last the next 12 months. Essentially, this company is burning cash and running out of money extremely quickly, and the only thing that's going to prevent that is for more financing, or maybe further share dilution, or some type of miracle. Now, the good news is that the company highlighted that they did complete 2 acquisitions which added value to their overall company, and this therefore increased their overall number of assets on their balance sheet, totaling around $253 million. That would be thanks to the majority ownership of Bollinger Motors, as well as certain assets relating to ELMS, which is their electric last mile solutions. Essentially, Mullen could stay afloat by selling some of these assets or raising capital in some other way. However, the fact that Mullen was pushed this far to even do that is very speculative. So I really want to stress, we need to be smart investors. We need to wait for the projections and the fundamentals to line up with the company's share price before we blindly take on extremely unnecessary risk. Essentially, investing into Mullen is no different than actually betting or going into a casino. At least other companies that I report on, we have very educated guesses and a lot of data to go off of. Because right now, the current projections do not support any of these share prices or that it has a strong future. It would be much better to wait for this company to start to prove themselves and bring in really good projections and then investing into them instead of taking on unnecessary risk by betting and gambling instead of investing. However, with that being said, I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now for more honest videos just like this one. Subscribe if you are new, and I will see you in the next YT video.